Picture a world where you need permission to buy anything, and every choice you make is watched and recorded by your government. A world where you will be forced to buy what they want you to buy and prevented from buying what they disapprove of. Your money is no longer a tool of personal freedom, but a way to control your every move. Believe it or not, this world is closer than you think, and in many ways, it's already here. CBDCs, or central bank digital currencies, are becoming popular in many countries, including the US, UK, Australia, and Canada. So what are CBDCs, and what are the driving factors behind the global interest? CBDCs are a new type of digital currency controlled entirely by the government. Unlike decentralized and private cryptocurrencies, CBDCs give governments access to all your financial data, including details of every transaction you make. This could eventually make banks obsolete, as the government would be in control of your wallet. While the intent of CBDCs is to provide security and efficiency, there are also challenges with physical currencies that governments could easily overcome with digital currencies. For instance, the US government has proposed lowering the bank reporting limit from $10,000 to $600 to tackle tax fraud among the super wealthy. Despite concerns that this could invade privacy, Treasury Secretary Janet Yellen believes that the move is necessary. However, the question remains: if the US government is targeting billionaires who are creating a $7 trillion tax deficit, why is the threshold so low? While Yellen admits that $600 transactions won't generate significant tax revenue, she stresses that having comprehensive information will prevent individuals from gaming the system by using multiple accounts. Just a few years ago, CBDCs were only a concept, but now they're becoming a reality. In late 2022, the U.S. Federal Reserve launched a 12-week trial of its own CBDC. CBDCs have already been fully launched in 11 countries. Over 100 nations around the world, including Australia, India, Canada, and Brazil, are in the development phase and will be launched soon. Some countries are at the stage of implementing their own CBDCs. All these 100 nations combined make up more than 95% of the world's total GDP, which means that CBDCs could soon be in use worldwide. When this happens, it will create an opportunity for a government-run payment system that will allow businesses and individuals to send and receive payments instantaneously, anytime in a day. This is because the money will move between banks in real time, taking only a few seconds. For example, if you own a coffee shop and need coffee beans delivered quickly, you can pay the supplier instantly through a participating bank. Your bank will send a digital form to the payment service, which will validate it and send a message to the supplier's bank to confirm that it can receive the payment. The payment service will then debit your account and credit the supplier's account, and both banks will be notified that the transaction is complete. The Federal Reserve wants to make a new kind of digital currency, CBDCs, because our current system relies on digital claims of money, not actual money. When we transfer money between banks or use payment apps like Zelle, Venmo, and Apple Pay, we are sending digital IOUs, not actual money. Banks need to use third parties to verify these transactions. A true digital currency would be different because it would transfer actual money directly from one person to another without the need for third parties. There has to be some sort of upside to CBDCs though, right? During the workshop on Next Steps to the Future of Money and Payments, Nellie Liang spoke about the future of money and payments, with a specific focus on central bank digital currency, CBDC. As she explained, central banks play a critical role in the global monetary system by controlling the money supply and facilitating payments. Changes to the design of central bank money and payments could have significant implications for consumers and the economy as a whole. There are growing concerns about CBDCs because they will give the government a lot of power. It would be bad enough that the government would have access to all of your financial data, but even worse is the fact that CBDCs could be programmed by the government to have complete control over how you use your money. For example, CBDCs could be programmed to limit the amount of money you spend each day, or precisely what you are allowed to spend it on. There could be limits placed on the amount of alcohol a person could purchase within a day, or it could even be prohibited for those with alcohol-related offenses. A CBDC would also allow policymakers to implement a negative interest rate, causing people to lose money. This might be done to promote spending, essentially use your money or lose it. Even worse, it would also make it a lot easier for the government to seize assets if you are not conforming. At any point in time, your financial assets could be taken away at the click of a button, and you'd have no recourse. A CBDC could also be used by the government to control your carbon footprint. With growing concerns over carbon emissions, governments may soon set limits on how much carbon each person can produce. With a CBDC, your government would be able to easily calculate your carbon usage. If you go over your monthly limit, they could stop you from buying things that produce more carbon, like gas for your car or a plane ticket. They could also stop you from buying high-carbon food items like meat, coffee, or rice. If you do buy these items, they could fine you for producing extra CO2. And because they control your money, they could just take the fine automatically from your account. CBDCs could also impact your freedom of speech. In fact, China has already taken steps to limit freedom of speech. In China, people's social credit scores are tied to their bank accounts. If someone says something negative about the government online, their right to use money is taken away. They can't even buy things like plane tickets or train tickets or certain items. Shockingly, over 23 million people in China have already been affected by this. What could happen if other countries follow in China's footsteps? But most of us don't live in China. Many countries are considered open and free, but recent events show that this may not always be the case. For example, Sweden has made it illegal for journalists to criticize the government. Australia's constitution doesn't protect freedom of expression, and new laws may allow government officials to sue critics. In Canada, peaceful protesters have been stopped from accessing their own money. This history of government wanting power over people is why many people fear the implementation of a CBDC. CBDCs are becoming increasingly popular around the world, with many countries, including the US, launching their own versions. However, some people have expressed concerns about the widespread adoption of CBDCs. Despite this, it's important to note that CBDCs can offer several benefits, such as improved security, faster transactions, and increased financial inclusion. In fact, the World Economic Forum has warned that central banks who do not adopt CBDCs may risk losing control of money and trust, which could lead to financial instability. Therefore, it's crucial for central banks to keep pace with this rapidly evolving landscape to ensure that financial systems remain stable and secure. Ultimately, the adoption of CBDCs is becoming increasingly likely, and it's important to embrace these new technologies to reap the benefits they offer. Central bank digital currencies, CBDCs, are the future of money, and governments around the world are racing to launch their own versions. But before you rush out to buy Bitcoin or other cryptocurrencies, it's important to understand that CBDCs are not the same as decentralized cryptocurrencies. So don't panic and sell your dollars just yet.